You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from theoptionsinsider.com and co-hosts, Uncle Mike Tusaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi, and Mark the Greasy Meatball Sebastian from OptionPit.com.
All right, everybody, that rockin' tune means it's time once again to gather around the old option block. My name is Mark Longo from theoptionsinsider.com, as well as a little thing we like to call around these here parts, ye old Options Insider Radio Network. A ton, I'm not even going to give the number, just a ton. I think it qualifies as a metric ton at this point of content on the old network, including hundreds, well, closing in on 500 archived episodes of the option block. Where can you find all of that tasty, delicious goodness? Well, any number of places, including theoptionsinsider.com. Don't forget the S options. Leave it off. Who knows where you go? All kinds of crazy places. But optionsinsider.com, click on the Insider Radio Network tab, and you're pretty much off to the races. Of course, iTunes, Stitcher, Aha Mobile, all those fun places as well. Seems like the issue that iTunes was having with some of the podcasts seems to have been resolved. Let us know if you're still having some issues. It seems like it was really delaying the downloads. People were reporting that some of the shows randomly, not all of them, but some of them were taking, hours to download all of a sudden, all sorts of weird stuff. That seemed to be a sporadic iTunes issue. I even encountered with a lot of the shows I like, not just ours. So they seem to have sorted that out. So if you still have that problem, let us know, but it should be fixed. Check it out. Maybe update your iTunes. That should fix it. And of course, you can always grab our iOS and Android and Amazon Fire mobile app. Just search for the Options Insider Radio Network in all those stores, and you'll find all that good stuff. And I am joined on the old program by the host of the ever-popular, ever-exciting, ever-scintillating Options Oddities program. If you haven't checked it out by now, listeners, I encourage you to do so. Surf on over to the TD Ameritrade site, actually. Every day, noon Central, 1 p.m. Eastern, you can join Andrew in there to break down all sorts of fun, unusual activity. He also does some fun other stuff at this little place called The Pit, I believe they call it. Lots of fun stuff cooking over there. Welcome back to the Option Block. Glad you can slum it with us again, Mr. Rock Lobster.
You know what? I don't even feel like it's slumming anymore. I'm so comfy here now. I don't even feel the slumming anymore. I don't.
You're starting to rival me in terms of sheer radio output, sir.
I was just trying to count up how many oddity shows that we've done, and it's I think it's over like 160.
I can pull up the exact number for you if you give me about 3 seconds. If you vamp while I search for 3 seconds to find the exact number for you. You are on number 161, sir.
What a guess.
So there you go. Well done, sir.
That's a heck of a lot better than the sizzle.
And they're usually like, I think, 24 hours in backup before the podcasts go live so the TD guys can have that live stuff. So probably actually 162 in the can. So, yes, a lot of sizzle. A lot of sizzle to go. If you haven't checked out that show, listeners, and if you like what we do here on the Odd Block segment, then by all means, check out that show. You're going to love it. But now it's time for us to start this show and dive right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the trading block.
All right, everybody. An interesting one to parse. A lot of stuff cooking off this week in the markets. We are recording this today, as usual, on Thursday, April 16th, the day after tax day. So hopefully you guys got all of your forms filed and your payments sent and postmarked and all that fun stuff. I know it's always such a fun time of year for everyone, but now we can all celebrate. We did it. We're all done. We made our payments, we collected our refunds, and if you have refunds, let's put them to work in the old market. Speaking of the market, not a heck of a lot going on from a broad market perspective. Most of the major indices pretty much unched on the day. From a vol perspective, volatility after a brief flirtation with the 14 handle in the VIX land is now starting to trend a bit lower again, as a lot of us prognosticated on this program and on the Vol Views program last week as well. It didn't seem like there was a lot of potential drivers for upside, aside from our friend who was loading up on every upside call he can get his hands on in June in VIX. But that guy aside, didn't seem like a lot of other big drivers or potential indicators of looming upside from a vol perspective. But that isn't really what was catching our eye this week. There was a lot of stuff to parse. But before we get into some of those individual things, I shall give you pride of place. Mr. Rock Lobster, what caught your eye in today's and perhaps the last couple of days' activity?
You mean besides Netflix going up $80?
Ah, the Widowmaker. You're diving right in, sir. All right, let's dive right in. Let's do it.
What really, I'm to be honest, is the surprise of the lack of anything happening, sort of waiting for something to happen. Mostly because we have, and I think the surprising rally in oil and all the drillers and producers and, the integrated oil companies and stuff, they're kind of staging a bit of a rally here. And I don't know if it's short covering or what, but I think those are the biggest surprises, that the fact that oil's kind of making its way back up, and everything oil related, even the old Russian RSX stock market is back from it. Just in January, it was $12, $12.50, and it's trading 20 now. Look at that for a pretty gigantic return on your money. So who says you can't make money in the stock market?
Who says you can't make money in rubles, baby? That's where the money is.
Exactly. Basically, when they say a country is done, that's probably when you should start buying the equity. Just wait till they say it's done, though.
They just take the Buffett approach and just blast out a lot of really long-term puts. And then they pay you a ton to do it, and then you're a happy camper.
Exactly. And it seems to work well for that guy.
Yeah, I don't think he's complaining. But yeah, macro stuff cooking. Let's start off with the one you think caught your eye and probably caught the eye of a lot of our listeners as well. Formerly known as the Widowmaker, I guess today, I don't know, the husband and or wife maker, the children maker, whatever you want to call it on the positive side today, because the news from Netflix is not that it's got, cut in half as it did famously. What was that? About 2 years ago now, coming up on it, when they changed their name. What was that crazy name they chose? That was all kinds of nuts, and the company just got crushed. Deservedly so. And since then, it was rocking and rolling, certainly rocking and rolling going into earnings. It closed yesterday about $475, and the at the money $475 April straddle going out right around $46. So a hefty margin. Seemed like that. Many people thought maybe that might be Netflix moves. Maybe that was perhaps a wee bit much, but didn't matter. It was, in retrospect, far, far too cheap, because we saw the street just loving this one. It took off in the after hours. I saw a lot of you guys tweeting to us with your strategies and stuff and what you guys had on. And hopefully, I think it looked like it worked out for a lot of you, which is good. So apparently some call traders and or put writers in our audience. But it looks like, it rallied pretty substantially in the after hours, over 12%, I think up to 13% at one point in the after hours. And then that question became, well, is it going to stay there, or is this going to be one of those head fakes that we see so often that immediately are followed by cries for after hours options trading, because look what a big, huge move I missed. This time, you didn't miss out, listeners, because, of course, if you're paying attention today, the rally continued for a total of 86, nearly 87 handles today, up 18.3%. on the day. So that straddle that seemed underpriced at $46 went out at about 2x that. So just crazy town. And Andrew, what a dim view I take of analysts here. Maybe this is one reason why I was going through some analysts revisions and things after this number. And we saw one company, I'm not familiar with them, FBR and Company. They jacked their price target all the way up to $900. So now, as a result of, I guess some of their shows are doing well. People are subscribing. Everyone likes House of Cards. Hey, right, that's a good thing. So therefore, the stock's got to be doing well. So now, of course, it's $900, which was which was almost a doubling of where it went out pre-earnings, which is madness. And then we have another company coming out. This is Credit Suisse, a firm I've actually heard of, and they raised their price target to 505 from 461. So I'm thinking perhaps they're a wee bit outmoded at this point. They're outdated. The stock has left them in the distant past by 10% or more.
Yeah, tell Credit Suisse, take a position, man. All right, really go out on a limb.
But you know, yeah, I know. So they're going out on a limb, and then the stock is now 10% above their target price. You think that would prompt an instant sell? No, they're neutral.
Yep. Nope, we're just neutral.
What value do these people bring to the table, I ask you? I guess why I always say, look at the numbers, that's fine, but look at the real money that's actually being wagered on these names, like the straddles, real premium, real dollars being traded, hedging, speculated on, and that gives you a much more consistent. In this case, even that was not optimistic enough, but still, that over time is going to give you a much better barometer than whatever this madness is. $900 to $505. That was the range. Great stuff. You guys must have been tearing it up on Netflix in the pit chat today, Andrew.
We did. We actually looked at some trade ideas. One of our clients basically had kind of an interesting one where she sold some real far downside puts, like below 400, sold put spreads, and then financed upside butterflies with them, and made a small fortune on that today.
I'll say that's a decent trade. I'm surprised she got away with that in your chat room, because I know you're a fan of maybe doing one leg of the risk reversal, or in this case, the risk reversal fly, but you're very loath to do the other part where you actually pay for some premium to the upside. She somehow convinced you she was going to do it, huh?
Well, she did on a ratio.
Yeah, okay.
So it was a net credit overall.
I see.
And then we looked at
free
it
juice.
After
free
we
juice.
looked at the same type of trade, and the same type of trade did really great from morning, obviously, with another 25 handle rally. So it's just one of those things where, the good thing with Netflix is you could still sell puts $100 out of the money, and there's still value there. So it pays for a lot of,
that's the kind of story I love. Someone puts on a pretty well-constructed position like that, gets essentially paid to do it because they have some option savvy. In this case, they have you kind of holding their hands through their trade, and then it works out just spectacularly for them. And they didn't just go out and buy a call or something else of equally, that would have worked in this case too. And this is kind of the scenario where, someone on the craps table in Vegas is betting the yo and all these crazy stupid trades, stupid bets, and yet people are throwing them, so he looks like a genius. This is the scenario where you could look like a genius with stupid trades, like buying, $80 out of the money calls and things like that. But in this case, she constructed it in a much more nuanced, savvy way. So ballyhoo for her. Nice to see the ladies diving into the pit chat too.
She's a very good trader. But I would not say that's a position for most people, because but she's also sizes it right, and things like that. But what was funny is I was trying to figure out if you had to guess, what's the market cap for Netflix? They have 60 million streamers, 60 million subscribers now. If you just guess fast.
Well, the market cap, I'm trying to think what their monthly rate is. So that's 60 million. So you're talking like, that's not even $500,000 in revenue.
Well, they have 60 million.
Because it's not even $10 a month, I don't think, right?
Right. No, but I'm saying, what's the market cap for Netflix?
Oh, with this today's move, good God.
So it's $25 billion.
Is it that high? Wow, crazy. That must deeply offend you, the fundamentals that you are.
Well, what I'm thinking is they have like $5 billion in revenue per year, something like that. So yeah, it's trading at a multiple to revenue, but it's almost worth as much as Twitter, And so I guess it's, what the market values those streaming customers on. And right now I was just trying to figure out, the value per streaming customer. So which is like $500 per customer, something like that, or a little less. $400 per streaming customer. That's what they value it at. It doesn't sound totally outrageous when you hear it like that. But that's what they're currently, when you think about it, I was just doing the value per customer on the market cap.
I'm looking at, they're about 5.8 billion. I'm trying to think what else. Clearly, subscriber revenue is not their primary revenue stream. I think they must have. I think they obviously have their own shows now. They make money on those. There's rights associated with those and selling those and things like that. But yeah, they're obviously, and of course, there's some advertising in there too, somewhere in some areas. But yeah, it's I'm not sure where they're pulling all that revenue. unless that might be just domestic. I don't know. That seems high for 60 million subscribers who aren't even paying $10.
Well,
okay, no, wait, that's $10 a month. What am I thinking? I was thinking it was $10 a year. Forget about it. My math is all over the place today. Madness. Forget it. Forget it. I'm on crazy sauce today because these numbers are crazy and they're making me crazy.
And you have now entered into the crazy zone. Yes, I think I'm not trying to give the stock an excuse. It's certainly an expensive stock, but I have seen much crazier valuations with a lot less access to revenue than this company does.
Indeed.
Ever since they started adding subscribers, that was the key thing. So,
well, they actually have some shows.
Subscribers, they're going to grow.
They have some shows that people like now, and they own them wholesale. So that's a nice thing. I think I selfishly like when people get into the content game because that shows that content is valuable. And hey, our entire business is predicated on content, so we like that.
I hear you.
But before more madness sets in for both of us, let's talk about some other things that are of interest in the realm of options. Get away from the craziness that is Netflix and into perhaps the equally crazy decision we're always lamenting. Andrew, probably since you got in the game, I know certainly since I got in the game, not that long after we started seeing the multiple listing and all that craziness. And the question then immediately arose, how many exchanges are 2 exchanges when there was just 2 or 3? Now we're at, a dozen, and people are still saying how many are too many. And now you can add ISE, of course, famously announced they're going to have a new one, a 3rd exchange coming online sometime before the end of Q2. And now you can add, so that would make number 13. And now you can add number 14 to that list. With BATS options, yes, one of the latest additions to the game, BATS options, now adding a number 2 exchange. If you're not familiar with BATS, they're, of course, the subsidiary of the big equity trading stock exchange platform there. And, of course, their options arm has kind of languished. They had a lot of problems, certainly post the IPO, that really hurt them on a lot of fronts, including on the options side. But in recent months, they kind of have surged. They got about 9.4% of overall options market share in March, up pretty much over more than doubled from the same time a year ago. Of course, the question can always be asked, how much of that is them actually just going out and paying for flow? If you jack your rebate up incredibly so everyone's incented to open on your exchange and close somewhere else, you'll get a lot of flow, but as soon as that goes away, as soon as your rebate comes down because it's not sustainable, that flow is going to go away too. Regardless, BATS diving into the fray with number 14. Does this concern you at all, Andrew, or are you just kind of blasé to this at this point?
I'm incredulous they could still throw money at it. I mean, I guess there must be money in it, right? If they keep opening more exchanges. I just don't. At some point, they're going to shut down the whole payment for order flow thing anyway. And then all of these exchanges, half of them are going to go disappear. Or they're going to change the rules as far as maker taker and all this other kind of stuff, just because it's so ridiculous. I'm just looking at the list of exchanges. You've got what's amazing is the Miami exchange, which was always a dream of people in Chicago, where they're just going to take the exchange and move it to somewhere with good weather, to Florida.
But it's not in Miami.
They actually did.
Yep. Except it's not in Miami. It's in Princeton, New Jersey. So that kind of breaks the love of it. Yes. Like the Boston Options Exchange is based out of Chicago. Yeah, it all makes sense.
Yeah, and I remember. Then there was I think it was a subsidiary of something in Canada, or I don't remember where. I don't know. I'd made markets. I did some streaming on the box, made ages ago. But the whole thing is, I don't see how they add any value, to be honest. I don't see it. I don't know what they do. I don't know what they do for the customers. It's just because ultimately, once you have two liquidity providers, you have competition really. And 2 exchanges and you have competition, and that's, but somebody's making money somewhere, I guess. So we're going to keep opening up every bizarre exchange known to mankind.
Yes, and most of them will subsist on, 0.5% of market share. Somehow that is indeed viable, apparently, as a business. As you mentioned, MyX, they're still battling that battle as we speak. Now, all of these new venues coming online, well, you need something to trade on them. Well, this week you got a good helping of those as well. A lot of IPOs and planned IPOs hitting the street this week. We'll start off in the land of online crafts. Etsy, they make a lot of all kinds of weird handmade stuff and interesting stuff. If you're into that craft scene, that's the place. They went public this week on Thursday, actually. So today they came in hitting it at $16. And after just a little bit of trading in the afternoon, pretty much almost doubled, just a little bit below 30. So some love for Etsy. And you might think Etsy caters to perhaps the female clientele. Well, then perhaps you want to get the men on board. You launch, this one cracks me up, Andrew. You launch or consider at least the IPO for a married dating website. Apparently there's a lot of revenue in that. Must be a lot of disguised credit card numbers going in up there to that website or something, Andrew, because I can't see how much of that revenue is above board. It's got to all be concealed. What they actually reported on the credit card, I'm not sure. But Ashley Madison is, of course, that married dating website. Apparently got enough volume to consider going public. They made some rumors about that this week. We'll see how that goes. And if that wasn't enough weirdness for you listeners, we also had the much ballyhooed, off-delayed IPO of Virtu Financial this week. They were, of course, a big deal. They were going to go public last year, and then Flash Boys hit, and everyone and their mother was putting a microscope on HFT, and of course, Virtu very active in that space. So they kind of decided discretion was the better part of valor. They didn't want to go public in the wake of all of that anti-HFT backlash. Pushed it about a year, and now going public. And again, also having a good day for them, rising about 17% in their name. A lot of people watching that one, of course, because that kind of lays open and puts, rubber to the road, a lot of the misperceptions floating out there, and a lot of, suppositions about what goes on in the HFT world, how much money these firms really make, what they're actually doing out there. When you go public, you can't hide a lot of that stuff. So it'll be interesting for a lot of people to really sink their teeth into those numbers and see what's actually cooking in that space. Any of those three, one potential and two actual IPOs catching your eye? Any of your pitch shatters excited to start slinging some options on those, Mr. Andrew?
Nothing to start slinging yet, except for Sebastian is still wondering how Shake Shack is $50 or something stock. But other than that, until we have options on them, we really don't care very much. That's the bottom line.
So we got about a week or so, or maybe 2 weeks, depending on the situation. And then we'll get some interesting options slinging on those. Yeah, we're not a stock show listeners, but we do mention them because I know it's been a while since we had a good IPO to really, and some names you guys may actually want to trade. And now you seemed like a glut of them this week. So that's interesting in and of itself. It's always nice to add a few new names to the stable, Andrew. We can actually have some ones to discuss, make earnings season a little bit more sexy, And hey, Ashley Madison goes public. That's all the sexy you need, right?
Yeah, well, apparently, for some people.
And speaking of sexy, let's round out the trading block with this one. You think sexy, you think this man, you think Ben Bernanke, am I right?
He is the personification of Fed sex appeal.
Yes. Well, apparently he's not content with the old, kind of post-Fed, post-presidential, hit the lecture circuit, hit the book circuit, make a lot of money, do speeches for $100,000 a pop or more, and do well that way. Because he's going to work for Citadel now. If you're not familiar with Citadel, listeners, I'm sure most of you are. One of, if not the largest market makers in the options business, which is why this is very much an options story, based here out of Chicago. Now adding a former Fed chairman to their ranks. Does that dismay you at all? You think it's kind of just, hey, look who we've got, kind of one of those celebratory hirings, Andrew? You think there's actually something perhaps more interesting and or insidious lurking therein?
I think the guy that runs Citadel is probably one of the greatest traders in the world, and he didn't get that way because he was stupid. And he realizes that betting right on monetary policy at this point, since it is driving the engine, so to speak, he wants the guy that is most closely associated with it. So with the Chinese possibly doing some kind of easing and it's not ending in, Japan or Europe anytime soon, although the U.S. here, he wants one of the architects of the whole thing. He wants to understand how the guts work. So it makes sense that you're also a little, Bernanke's going to work for Citadel. And I'm like, well, what the heck? Might as well make some money now, because it's like the guy worked for 8 years for the government, didn't make a whole lot of money and had a lot of stress. So might as well now. All he just does is think and gets paid a lot of money. So Bernanke did a pretty good job. So what the heck? Give him a good job at Citadel.
I can certainly see his logic for it. I'm kind of two minds of this. We see this a lot with a lot of the lower level SEC staffers and government staffers. Anyone who has any sort of remote competence. We focus mostly on options, so people have remote competence in options getting poached by a lot of firms in the industry. Get-Go picking up a bunch of them from the SEC a few years back, and others have done that consistently. Whenever you see one or two people at the SEC or other regulators who quote unquote get it about options, usually they're not there that long. But those are, mid-level staffers. That's distasteful, I'm sure, but they wait out their grace period and then they do it and they cash in on that. That's kind of one of the deals of going to the government. But I'm kind of two minds on these guys, Andrew, because I think Fed chairmen, particularly one like Bernanke in such a tumultuous period, or Greenspan, they're almost on that presidential level where it's such high level, such a position of prestige and influence. It's kind of, you almost don't want them to go back to, they should be on the lecture and on the book circuit forever. And I'm not sure if you kept up on the presidential / big speaker circuit. It's pretty lucrative, Andrew. You can do pretty well going out. I've been at a few Greenspan speeches. I know people who booked them. I know how much he got for those. He does pretty well. He's also taken some jobs with some hedge funds that have kind of caused some consternation. So I don't know. I think when you get to a certain level, I think maybe perhaps the lecture and book and or academic circles are your choices, or perhaps charity, But going back into the business again, I don't know. I think it's a bit unseemly. Even if it is kind of a big marquee hire for Citadel and them wanting to do this. I don't know. It's a weird one. People are up in arms about it. I'm kind of, I've seen this a lot now, so I'm not as surprised. But you don't see it at this marquee and this high a level, and certainly not as public as this. Usually if they do it kind of a little side deal. I think Greenspan did a kind of a bit of a side deal with Paulson and those guys. But it wasn't as publicized as this. So certainly a little bit more public, and perhaps it's certainly not the last we're going to see of this headline. But again, Citadel, big player in the option space, so who knows? Maybe Mr. Ben, Uncle Ben there, will become a little bit more versed in the world of derivatives. Meanwhile, it's time for us to move on, get into the shadier, seedier side of the options market, because it's time to dive into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, you know the drill by now. This is the portion of the show where we pick up the rocks and look into the shadows and the dark places, the nether regions, if you will, of the options market to see what's lurking over there. We're going to kick things off with Kinder Morgan Inc., ticker symbol KMI. I'm trying to remember the last time we talked about this one. It's been quite a while. So a bit of a newcomer here on the old program. And, of course, closing today, $43.68. This is the name that does just a hair under 20,000 contracts a day, doing a wee bit more than that today, Andrew, to the tune of 284,000 contracts today. This is, I think you can call this some serious paper, Mr. Rocklobster. Would you agree?
That is some fat paper.
serious business paper. I have to scroll all the way out to Jan 2017, listeners, to light it up for you. But this guy lit it up for some size. Remember, we were talking about someone out there who loved some longer-term upside in VIX last week on the Vol Views program. Well, we're talking a lot farther out and a lot more today out here in KMI. Maybe not more size, but farther out, that's for sure. These are the Jan 2017 50-60 call spreads going up. And we started profiling these on the site this morning. It went up 24,000 times in two large blocks for an even buck paper buy-in. As the day went on, our friend said, I need some more of those. To the tune of 108,000 to be precise, of these call spreads going up. That's quite literally a ton at this point. All on some size open interest, 56,000 of each. So it looks like in the initial kind, looked like maybe, who knows, maybe this was closing, but as the size continued to pile in, clearly it was opening. So our friend there is clearly liking some upside here to the tune of, if this is all him, and it probably is, 150,000 of these 50-60 call spreads Jan 2017 for about $1. Listeners, if you've done your basic Natenberg, your basic options math, $10 spread, paying $1, you know he can get up to $9 on that. We'll see how our friend fares in the year and a half or so to come. Looking at a recent, about 2-year back chart of KMI, and our friend here is specking on some levels that at least we haven't seen in recent history. The highest KMI has reached is pretty much right around these levels, right around here, right around 44 or so. So this guy needs a 6-handle move beyond the highs we've seen right now just to make this spread start looking interesting. Again, he's got about a year and a half to do it, so he gave himself some wiggle room, but still an interesting and just ridiculously sizable spread. Mr. Rockloss, what's your take on our friend pretty much buying all the upside there is and more in KMI here?
They certainly were. And I was looking at the pricing, I was looking at fair value pricing, and I think whoever was selling it to him was only getting like 4 or 5 cents worth of edge. To sell 150,000.
Yeah, I was looking at this and I was like, man, for $1 and you're facilitating all this, that's
it's pretty big.
That's and then I went and looked and I saw like about almost a 10,000 lot of the Jan 40s going up. Maybe one of our friends who facilitated that decided, yeah, I think we need to perhaps buy something.
Buy something.
Just in case. When you see these weird legs going up like this, listeners, on a trade that is clearly linked and then some odd liar but still large leg, chances are it's probably one of the firms that facilitated it or market making firm took on the other side of this and decided they need something against this. And so they went deep. They went the 40 handle this time.
And they didn't mess around because they just need some longs.
That's like get me something. I need it now. What can I get? Oh, about 9,300 of the 40s done. I'll take them. Exactly. Of course, there's 14,000 on that strike too. So that could be our friend legging into some weird. That could be our friend piling in there too. But I probably would lean the former versus the latter. But still interesting. All kinds of weird stuff cooking over here.
I'm trying to think of what makes KMI make that move. Because it's a well-run company. It generates huge dividends and all that stuff, but that's a pretty darn big move. What are they going to do to get to that level, which is basically 50% rally, to make that guy pay? So even a $4 or $5 rally, but I don't see what happens with KMI to make that happen. But maybe somebody knows something we don't, so we'll see.
Yeah, if you're not familiar with KMI, not surprising, listeners, this is an energy company. They operate in the pipeline across the board, crude, CO2, all that fun stuff, nat gas. They make pipelines and terminals for all that stuff. So clearly energy top of mind for a lot of people these days. And our friend here thinking the upside run in KMI is nowhere near done. We're going to file this one in the very, very much to be watched, because this guy's going to be wearing this for a while. He's not getting out of this anytime soon. So it's an interesting one to parse, as we'll keep an eye on this one as we move on into our next name. I'm not sure how we can match that one. Maybe we should have started with that one last, Andrew. That was some size out there in KMI. But we'll do our level-headed best here, listeners, as we move on to our next victim here. If you were thinking, KMI, I wouldn't mind following up all that grease with some turkey. Well, then we got it for you in spades. In particular, TUR. This is the iShares MSCI Turkey ETF. A ticker symbol, of course, TUR. Closing today right around $46, up about $1 or nearly 2% on the day. This is a name that, compared to KMI, does a little bit less volume, about 243 contracts a day versus the 20-odd thousand they average a day, and doing nearly 5,000 today. So still very sizable from a relative perspective. And pretty much the lion's share of that looks like, let's pull up the strike here and we'll get the exact number. Yes, of that total, 4,301 of those contracts came in some May 43 put buyers. Someone just could not get enough of some near-term downside here in TUR, paying up from 60 to 70 cents to do it. He kind of had this hanging bid that kept out there throughout most of the day. Went up in small blocks at a couple of different intervals. Started out kind of paying up to levels about 70 or so. Then he kind of got a little bit more reticent. He said, I'm kind of good here. And he kind of hung out there and got the rest actually a little bit cheaper on him as the stock rallied down to about 60 cents or so here. It looks like no stock of any significance going up with this. So looks like this is our old straight up downside put play. I don't see when earnings, well, of course, this is an ETF, but so no earnings on the horizon, but no big events either that would make you want to perhaps say, hey, I need some near-term hedging. But this does speak to, has the feel, I'm not sure, we'll see if you agree, Mr. Rock, has the feel of perhaps someone who's sitting on a bunch of turf and wants to perhaps hedge himself in the nearest term.
There could, it's also like a geopolitical play. Maybe something gets nasty in, Syria, Iraq. Turkey has some, they could have some backyard problems, I guess, but they survived this long. The thing that I thought was most interesting about the put trade, there's kind of like a go long buyer. They get filled, they back off. They get filled, they back off. Is they're buying about the year low, the 52-week low with these puts. So, you buy the 52-week low on puts, you're either something bad is going to happen or you're trying to hedge an equity position and you're just trying to stop yourself out. So, I'm thinking it's more of the latter because, again, I don't know enough about the economic situation in Turkey, but they're tied to the euro. We could have a little bit of the Greece thing is still kind of lingering because they keep playing hardball, and I don't think the EU is at this point politically they can afford any problems with Greece. They're just going to cut them loose. And Turkey just by proximity could have some troubles with that. So it might be a tacit play on that, but it doesn't really. It's not a thing that trades a whole lot, and then all of a sudden somebody wants a bunch of puts right on the low. So I thought it was, let's just say, curious at best.
I like that. Backyard problems. That's a very euphemistic way of putting it, but very appropriate nonetheless, sir. All right, and let's move on to our final name, our final victim here in the old odd block. This is Royal Bank of Canada, ticker symbol RY, another one we haven't checked in on in quite some time here. Closing today, $66.67, up about 1% or so on the day. And this is a name that does just a hair shy of 3,000 contracts a day, doing about 11.5 today. So a pretty robust day for them as well. And the lion's share of that volume, again, coming in, I'm trying to think last time we saw a put fly like this going up, a pretty decent size one for this name, of course. A bit of a ratio, a bit of a broken wing, whatever you want to call it here on the put fly. It was the 60 double, 60, 55, 50 put spread going up 2,000 times, paper buying and then selling 5,000 of the 55 puts and then buying, looks like about 3,000 more of the 50 puts. Doing all of that for a debit. So they really wanted to put this on a bit. And we talked about flies a lot, talked about broken wing flies a lot here on the show. Usually we see them on the call side, don't see them on the put side. This one is unusual on a couple of different levels. Looking at the OI here on these strikes, the July 60 puts, negligible, not much really cooking there, but about 20,000 and nearly on the July double puts and about 10,000 on the July 50 puts. So someone has been at work on these strikes previous to our friend here, which is interesting. Doesn't look like this stuff is perhaps adding to that, but still on the ratio, it does hold in with more on the doubles and less on the 50s like the open interest does. What's your take here on our friend slinging some downside here in Royal Bank of Canada, Mr. Rock Lobster, near your neck of the woods, near your stomping grounds? You got some backyard trouble up there.
It's thing is my wife and I are like, we got kids, like we want to go to Paris. Well, we're like, screw it. Let's just drive to Montreal.
Say you're a couple hours from Paris Junior.
I can't, I don't want to take a bunch of kids to Paris. Forget that. So This one I thought could possibly maybe be a roll, but it went all up in one piece. There is some open interest there. It's kind of a weird ratio of a trade, don't you think?
I was kind of puzzling.
Make it work.
I was kind of puzzling over the ratio of it. A lot of times you see these weird ones because they want to make the pricing work out to some even level. But yeah, the ratios, I had to kind of look at it a few times to see why they would choose this. The 1 by 2.5. I guess I kind of get it, but then the extra on the bottom there, yeah, it's a funky one. Hence the odd block, sir.
So basically, okay, they're buying the 60 put. They're spending some money for protection because net they didn't take a credit in for it in the first place. So they either have to long against it or they're looking for Royal Bank of Canada to get to the lows, which is around 55. So, and they're just trying to think of a cheap way to do it. All right. It's just a lot of contracts that don't seem to be doing a whole lot of anything. I could see that they might have rolled some puts up, but it looks pretty clear they sold the doubles and they bought the 50s. So maybe closing some of that open interest. And again, how do they make money if they were doing that? It's all just a big ball of confusion to me. It wouldn't surprise me if I saw all the open interest jumped on all three strikes tomorrow, as this is just a new trade and somebody's trying to find like I said, they want to spend a certain amount of money on some downside, and that's what they did. So maybe they're looking for the loonie to tank and the Royal Bank of Canada to have problems and all those kind of things. So just a funky ratio that costs money. That's all I can say about
yes,
that.
That's pretty much. It is a weird one. You can scratch your head on it a lot. And then, of course, if you try to parse it with the open interest, it gets doubly weird, which is why I kind of lean on the I think it's additive as well, because this trade itself is weird enough. You start trying to figure out why they would do this ratio in conjunction with those open interest levels. It makes even less sense. So I think we'll just leave it as an outright. Listeners, if you have some other ideas, let us know. Write in. Let us know what you think. Why would you do such a funky ratio? Because even the prices don't work out. He does it, 1 by 2.5. So that almost pays for his put, but not quite. And then he kicks on 3 more on the downside again. So he's got a substantial debit going there. So it's an interesting, like we say, sometimes you have these love your broker trades cooking here on the old odd block. This one perhaps lurking in that neck of the woods as well. Speaking of necks of the woods, it's time for your neck of the woods to come up because it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, we got tons of listener mail to get to, so we'll dive right in. We got some serious ones. We got some silly ones, Mr. Rock Lobster. Maybe we'll start off with a serious one, then we'll finish up with maybe if you have time for some silliness. Let's start off here because we're just talking about debit spreads. Maybe let's go the other side of this as well. I was talking to some people in a chat room this week, and they were asking questions similar to this one, actually. We get this a lot on the show, people writing in, my spread didn't work out, what happened, didn't work. This one comes in from Tom. He says, when should I adjust a credit spread? What percentage of profit should I aim for? The eternal question, Mr. Rock Lobster. People put on these spreads all the time. They learn from, expiration graph style of options education. So they buy a $5 spread for $1. They know at expiration, max profit is potentially $4 and they could lose that $1. And that's what they have in their heads. And they expect these trades to unfold that way and to get their $4. And in reality, they're probably going to get about $2.20. If they're lucky, and they should be happy to get that. And so, but that's a weird mindset for people to go from who have been educated this one way to now see the practical realities of the trading marketplace. So we had someone write in, I think, a month or two ago, the spread they had, and it moved their way dramatically in their fashion, and yet it still wasn't paying off. He's like, why am I not at my max profit or even close to it yet? Because they had to wait for that decay. And now you have that question of, hey, should I hold on to this for another month to let the rest of this decay out so the spread can widen out so I can get the profit I was meant to get on this trade? Or should I just take what I got now and move on, not carry this for another month? So it is the eternal question. We have discussed it many times on this and other programs. but it's always worth revisiting. I don't know. Do you guys, in your various mentee classes and things, do you guys have a rule of thumb, maybe a level like 70% that you try to beat into and instill in the head of your mentees and clients? Hey, you put on a spread, you take it off for somewhere in 60 or 70% range, you're a happy camper, or how do you guys work it over there?
So a couple things. One is, yeah, we do look for a target. So for credit spreads, first you think, where are you selling it relative to the money? So when I sell spreads, mostly when I sell put spreads, because I want to get long and I'm happy buying the stock down there, but I sell them to go out worthless. So I'm looking for out of the money spreads, usually put spreads, but mostly because that's where the juice is. You get better prices, and I'm looking for those things to go out worthless. And if I take the stock at that level, or I can close it, great. So if I can close it for 80% of the value, I generally do that, because the thing is you have an open position and there's not a lot of money to get left in it. I would rather close that and, roll and open something new that actually has some premium in it. So I think 80% is great. Although I do have clients that shoot for the whole banana. But I also have other clients that have learned that they shoot for the whole banana and they wait a little too long, and then their winner becomes a loser. So I think taking some money on them is fine, but the most important thing is, what are you going to do with it if it goes in the money? Meaning, if the short strike goes into the money. So my general rule is, for a put spread, I'll roll them twice, and then I'll take delivery of the underlying and start writing calls against it on the downside. So basically, if I get the premium that I sold the spread for and I get to the short strike, if I get to that zone, I'll roll my put spread, as long as I still think I'm right, because the market can do goofy things short term. I mean, part of the whole point of those is trying to grab something low. That's how I think of that. So that's what I would call rolling the spread. But I'm not going to do that forever. Eventually, I'm going to want the stock because it gets at a price where I just want to own it. And that's what I got. On call spreads, if you're selling call spreads and you're selling them out of the money, it's the same routine, but I will just say most call spreads, you don't get a lot for selling a call spread. And I know there's, and we have had clients that have these, okay, well, I'm going to sell these 10% or whatever, 15% out of the money call spreads in the index because it never can go up that much. And then they end up having problems, or they are too aggressive selling call spreads when the market's tanking, only to have the market snap back up in their face. So what I would say with selling, if you're going to sell call spreads, is, do you really want to be short at that level? How manageable is that short position? And what you could do to manage a credit spread if it's going against you is, from a risk point of view, a short call spread, let's say you take in a $500 worth of premium on your short call spread. And the most you could lose is $500. So what you could do to hedge that trade is spend $250 on calls if it starts going against you. Meaning, if for some miracle or for whatever reason you're able to collect your entire credit, meaning the market turns around, that's great. If you buy some calls or you buy some call premium against your short credit spreads, if the market continues to rip up, it'll just keep you from getting your face ripped off and keeping the loss relatively small. So what you should have is a management routine for whatever credit spread you sell. Management, pick a place where you're going to close it, and when it gets there, close it. Don't screw around. If you're selling put spreads, come up with some sort of rolling routine where you want to own something at much lower prices, but set those levels ahead of time. That way, when you get there, you just do it. You don't screw around. Because if you sell a credit spread and then it starts to expand and you panic and you close it, and then, then the market snaps back up, you're like, oh boy, I don't feel so good about that. So just have a routine that you're willing to do. And the next part is, right, so you'll have a spread that you'll roll to. So you have to be very careful on things like that, because you don't want something that you think you're going to roll forever on the downside. That's why I say just 2 rolls and that's it. You don't want, because remember, as long as you're doing credit plus strike, the stock has to move a long way against you before you're wrong, right? You have 2 rolls, at least you're keeping your losses relatively small on whatever you've done. So even if you decide not to take the stock, you're not holding a massive problem, right? Which is what you're trying to avoid.
I like
on the short call side, like I said, if you can buy a call to help alleviate some of the delta, that way, if the name keeps running straight up, it will reduce your loss. That's an alternative. And if it runs back the other way, you'll collect a little less credit than you did before, but it is a way to manage the trade.
I like that you mentioned the legs. Somehow I knew that question would appeal to you, but we touched on it many times before. The different percentages and levels. But I think what you added to it at that time, which is good, is also have a system for the amount of rolls you want to do, and certainly don't play around with the upside there. You don't want to mess around with the credit call spreads and they start going against you. You want to cut those off pretty quick. But yeah, you're right. Having a limit to the number of rolls is always something people don't think about when they think about risk management. They think about just having this percentage to get in and out, but then people always insist on rolling because they always do. And you're right. They roll to Oblivion. Perhaps a good title for this episode. But I promise.
You want to avoid that.
Yes, you do want to avoid the roll to Oblivion. I think we'll finish up on a silly one. I promised a silly one. This one comes from a listener who goes by the handle DuckTape. I like that. He writes, can you guys recommend any good movies about options trading? And that's a pretty slim pickings to choose from there. Mr. DuckTape. It's actually good you're on this show, Andrew, because I think that one of these will probably resonate with you. I think one of the ones that's out there is the Ewan McGregor movie, Rogue Trader. It's about Nick Leeson over there in Asia. I forgot where exactly he was, if he was in Singapore. I think it was in Singapore. And he was slinging a lot of straddles and things. It's not an options movie per se. You do see him trying to do a little bit of a floor hand signaling thing, which we found kind of hilarious at the time watching. And he is blasting out straddles and downside, which of course is what ended up blowing out bearings. So that's interesting in and of itself. If you understand options, you may have a little bit more understanding of the movie and what's going on, but it's not too deep into it. Of course, you have the old Trading Places, which is one of my favorites. Of course, turn those machines back on. Everyone thinks that's in New York or Chicago. It's actually in Philly, on the old Philly Board of Trade, I believe, over there, doing their FCOJ, the frozen concentrated orange juice. I can't remember a day on the floor of the SIBO when towards the end I didn't hear someone yell from somewhere across the floor, turn those machines back on every day like clockwork. And so that one never got old, of course. I will say a classic moment, if you watch that movie again, watch Eddie Murphy when he's in the pit and supposedly trading. It's hilarious because he has no idea what he's doing. He's admitted it since then. I was just saying yes to people and writing. And so it is hilarious to watch that in retrospect. But probably the other one that's probably more options related. You probably know this one a lot. That's why I said it's good to have you on, Andrew, is Quicksilver. Because he was on the P Coast, right?
Yep, he was.
Were you there?
Kevin Bacon.
Yeah, I knew some guys who said they were on the P Coast when they made that. Were you out there when they made that there, Andrew?
That was just before my time. But I know, like all the guys that are in the movie, I know all those guys. So, but they had a lot of locals.
Yeah.
And
yes.
And just because the P Coast, is such a well-run machine, they did not charge the movie company anything for using the floor.
Well,
like, the marketing will be great.
Yes. That has one of my favorite scenes ever for trading because Kevin Bacon goes back to the exchange, grabs a visitor's badge, and proceeds to stroll into the middle of the pit. On like earnings day, I think it was too. So every local proceeds to part the way for him because why wouldn't they give him a primo spot in the pit on a visitor's badge, no less? It's the best thing I've ever seen. And he proceeds to
back in the game.
Yes, and he proceeds to sling all this size on a visitor's badge with who knows what? No clearing firm, no counterparty, no none. No, that doesn't make movie magic. But yeah, that's probably one of my favorite of all the scenes. Of course, Trading Places probably in my heart is my favorite. Of course, Wall Street, they mention options once or twice. Not really an options movie. I think one time they're buying calls on one of the companies. That's really about it. But yeah, Rogue Trader probably has the most options content, and then of course Quicksilver followed last by good old Trading Places. But Trading Places is clearly the best. Turn those machines back on. All right. Unfortunately, we can't turn on any more machines here, listeners, because we're done. That's it. We're out. We're ghost. But before we go, as always, let me check in with each of my cohorts, see what they're cooking up really quick. We also saw Mattel reporting today after the bell. They, of course, infamously, their CEO resigned recently because Let It Go and Frozen pretty much killed Barbie. They have a new CEO. People were expecting pretty bad things for their announcement, of course, whenever that happens. The stock rallying pretty hard here in the after hours. I believe that straddle went out at about $1.50 or so, and they're up nearly $2 in the after hours. So perhaps premium buyers, happy campers out there in Mattel land. Mr. Rock Lobster, aside from Mattel, really quickly, what are you watching for the rest of this week into the weekend, and what's coming down the strike, or down the pike, I should say, or also the strike in the land of the pit?
Well, today, besides the land of the pit, but today you have one of those rare days where everything was down. The Dow, SPX, NASDAQ, I think the Russell, and the VIX all down in one day. I'm just trying to punch up the Russell real fast. Where is the IWM? Is it? Yes, it is. So it was just one of those days that just killed the volatility. Vol killer day, market didn't do anything. So I would be surprised if, that doesn't happen very often. And we'll see if we still see more of that to come. But earnings actually hasn't been the bloodbath that everybody thought it would be. So, and as a consequence, we're starting to get back to low volatilities for the year. Remember, in the beginning of the year, we're going to have this big volatile year. Well, unless Greece does something really strange where everybody gets scared for about 5 minutes and then everybody writes off the whole country, and they make it so that they can never borrow money again from anybody, I think we'll probably see a little bit more of this. And the earnings picture still, be careful of the gamma. That's all I'm going to say. You sell a bunch of premium near the money on these earnings because you think these things look so like easy money. It's so not easy money to be a good earnings premium seller. So I would just caution everybody to be very careful. As far as option pick goes, we have our weekly webinar next Saturday, teaching people about weeklies, how to use them right, and find ways to make dollars with them. And hopefully that will be well received.
All about making those dollars. I like that country with that currency. That's a good currency. I should get some more of that, I think.
The dollar?
Yeah, the dollar. I should load up. What's the conversion on the greenback to the dollar? Because I think I need to get some more of those. All right. On that note of silliness, listeners, I think that's going to bring to a close this episode of the Option Block. Far-ranging, far-reaching, lots of great stuff on today's show. If you have questions or comments, you know how to find us. We'd love to hear from you. And on behalf of the Rock Lobster, and let's even throw Uncle Mike in there, who's out lounging by the pool, quote-unquote, on assignment, listeners, and of course myself, I want to thank all of you out there and the listening audience for downloading, streaming, and subscribing, and indeed for sending in such great questions, serious and silly. And we'll see you next time right here on the Option Block.
preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Quality options.